Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday, the 23rd of July 2022, and we're publishing our gold and silver weekly update for the week ending the 22nd of July. So let's get to it. What an interesting week this past week was, but it'll be even more interesting this coming week. So, looking at precious metal prices, gold actually went up last week by $20, from $1,708 to $1,728, having hit a high of $1,739 and a low of $1,681, a rise of 1.2%. But a noticeably lower high and a lower low compared with the previous week. So we're not getting too excited just yet. In sterling terms, gold finished the week at £1,439. That's down just £1. And in euros, it closed at €1,692. That's down €1. Silver, however, fell 10 cents, falling from 1874 to 1864. Having hit a high of 1911 and a low of 1825, a fall of 0.5%, so moving in the opposite direction compared with gold. In sterling terms, silver closed at £15.53, that's down 27 pence, and in euros it closed at 18.25 euros, that's down a third of a euro. The gold-silver ratio rose from 91 to 1 to 92.7 to 1. And we're still really expecting that ratio to continue to climb. Now, looking at the prediction we made last week, we said we expect to see gold trade between 1650 and 1750, with 1625 and 1775 as outliers, and we forecast silver will trade between $18.25 and $20, with 1725 to 2050 as outliers. Well, gold traded within a range of $58, which is relatively tight, and kept within our normal trading range. Silver traded within a band of 86 cents, a little lower than normal, and like gold, again, well within our normal trading range. We can see that gold took a significant dip on Thursday, similarly to the previous week, ironically, and immediately after a weaker jobless claims report, but managed to recover all of its losses and moved into positive territory as it transcended into Friday. Silver likewise took a significant dip on Thursday, rebounded a little, but then dipped back again towards Friday's close. Now, the overriding influence of this rebound was in fact the ECB raising rates by 0.5%, which most analysts did not anticipate, and it basically took its effect on the dollar index, causing it to fall. Now, before we analyze the rest of this further, we'll look at some other financials and then go back into more detail. Bitcoin's risen again this week by $771 and currently stands at $22,130. Equities were higher but experienced some losses on Friday. The Dow Jones closed on Friday at 31,899. down 137 points on the day, but up 611 on the week. The S&P 500 closed at 3,961, down 37 on Friday, but up 98 on the week. And the Nasdaq Composite closed at 11,834, down 225 points on the day, but up 382 on the week. So the Dow up 611, the S&P up 98, and the Nasdaq up 382 on the week. Interesting move in oils in that Brent crude closed at $103.20, that's up $2, and WTI crude closed at $94.70, that's down $2.89. So there's been a bit of a disparity there between the two, which we suspect that gap will be made up a little this coming week. Now the dollar index still stands at a lofty 106.7. That's down 1.33 on the week, having taken a fall on Thursday. Now, economic data announced by the United States last week was relatively light, but most noteworthy was the increase in both the initial jobless claims and continuing jobless claims. One has to ask, despite a very strong non-farm payrolls, has perhaps the employment situation taken a slight turn? We suspect not necessarily, but there has to be some room for caution. A significant fall in the Fed manufacturing index for July from minus 3.3 in June to minus 12.3 hit the dollar somewhat, along with the ECB raising rates, suggesting to some that perhaps the Fed will not raise rates by a full 1% on Wednesday, but will likely curtail next week's rise to 3/4. Friday's flash manufacturing PMI for July was in line with expectations, but the flash services PMI was well down by some 6 points. But these are the flash figures. We'll rather wait for the finals. This coming week compared with last week is a very different picture, and we have quite important data to be announced. On Monday, we have the Chicago Fed National Activity Index for June. Okay. Tuesday, though, we have the Consumer Confidence Index for July and new home sales for June. Wednesday, durable goods orders, an advance report on trading goods, and pending home sales, all for June. But the most important piece of information on Wednesday will undoubtedly be the FOMC decision on interest rates and Jerome Powell, the chairman of the Fed's press conference thereafter. Thursday, again, the weekly jobless claims, which people will now look at with a little more interest. And we have the GDP first release for Q2. But again, now important data for Friday, though it's going to be too late to impact the decision on Wednesday, though we do suspect the Fed is likely to have some inclination as to the data on Friday, because we have PCE and core inflation index, the PCE and core PCE price index, and real disposable income and consumer spending all for June, and the final consumer sentiment index for July. Important data that perhaps would have given us a better guide had that been announced on Monday before the Wednesday decision. So we really kick off with Tuesday's Consumer Confidence Index, followed by the FOMC announcement on interest rates. And remember, the odds are still in favor of a 0.75% rise. I think the last figure I saw was 67% in favor of that rise. Another look at jobless claims on Thursday, and then inflation figures in its various guise on Friday will all attract analysts and bankers' attention. Now on Thursday we published a video entitled "Beware Why We Believe Now Is Still Not the Right Time to Buy Gold and Silver," and we put a link below. And in this video we highlighted that even though gold and silver prices were significantly down from their highs in the last 12 to 18 months, in our opinion they still have further to fall. Ironically though, we published that video while it was at the low for the week, and within minutes of publishing it, the video, prices began to rise a little. We should really call that manipulation. Anti-Illuminati silver manipulation. Though, let's be candid, the ECB rates, raising them, and the jobs report and manufacturing index had more of an impact than perhaps manipulation on this occasion. We still, however, have not changed our minds from the information we provided in that video. Now, a number of technical analysts are pointing out that Thursday's low gold flash price dip of 1678, down some 19% from its high of 2077, represents a key support level, which has historically been repeated and held. Whilst we fully accept this, we still not believe this will be its low for the year, though we can see traders regarding it as such very short term, and we may see a slight bounce in prices at least until Wednesday's announcement. There is nevertheless still quite strong resistance at $1,800. Silver certainly seems to have support at $18 and resistance at $20, with super strong resistance at $21. Perhaps the more gloomier of predictions among serious analysts is an eventual silver price of $15, though we have seen some touting as low as $12. However, it may still take some time to get down to 15. So this coming week is going to be both exciting and concerning for gold and silver buyers, hoarders, and stackers. We may have seen an oversold position last week, certainly Thursday, and a bit of a rebound. And the ECB being hawkish on rates has managed to curb the dollar index advance, which we suggested could happen. Though we did say we would not be surprised to see a $109 index if the ECB hadn't done what it did. Much depends now on what rate the FOMC decides on Wednesday. A 0.5% increase will cause precious metal prices, in our view, to rise. That may be surprising for some, but we think a 0.5% is well baked into the price. A 0.75% increase may put some pressure on prices, but a full 1% increase will cause gold, in our view, to dip below Thursday's low and perhaps even touch 1650. Silver will be equally affected, if not perhaps in a more extreme way. We could very well see silver plummet to $17 if there is a 1% rise. Our view, however, is that there will be a 0.75% increase, but we still have to bear in mind, cannot rule out the fact that the FOMC will not meet again for 2 months, which is why we are ruling out a 0.5% increase. They will err on the side of caution, our view. They will not be too hawkish, but won't be too lenient either. Now, with this in mind, we expect to see gold trade between $1,650 and $1,775 this week, with $1,600 and $1,800 as outliers. We forecast silver will trade between $1,775 and $1,975, with $1,700 and $2,025 as outliers. So we've stretched the spread simply because of the importance of Wednesday's announcement. What do you think? Let us know your thoughts on where you think the price is going to end up by the end of this week. Meanwhile, a reference to the video we produced on Thursday, link below. Thank you for listening. If you haven't done so, please subscribe to our channel, not forgetting to press the bell sign so you're notified of our videos as and when they're published. We will repeat this video tomorrow under a different thumbnail and headline. And meanwhile, we wish you a safe, enjoyable weekend and a most prosperous week ahead. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.